All right, let's talk. For those of you on Wall Street, the quants, the fundamental analysts, you believe the markets are a function of earnings, data, and algorithms. And you're not wrong. But I want you to consider a different kind of quant. One whose primary data set isn't an earnings report, but an ephemeris, a table of planetary positions. Today, we're diving into the mathematical case for financial astrology.
So let's just cut right to it. In your constant search for an edge, for some pattern in all that noise, what if you've been overlooking an entire data layer? What if there's a blueprint, one that maps the psychology of the market to the mechanics of the solar system? Let's actually examine the evidence for that.
Here's how we're going to break this down. First, we'll look at who is actually doing this. Then we'll define our terms, mathematically. We'll take the skepticisms head on, we'll see how this stuff actually translates into trades, then we'll peek inside the toolkit, and finally ask where this field is going.
To really get the methodology, you first have to understand the mindset. You have to see that this isn't coming from a place of superstition. It's actually a journey that starts with a deep, deep foundation in pure, rigorous, abstract logic. So take a look at this progression. It doesn't start with tarot cards, it starts with astronomy. Then it moves to a perfect 800 on the math SAT. The argument here is that astrology isn't a departure from these fields, it's a synthesis of them. And the real spark? The 1987 crash, an event that a number of financial astrologers actually saw coming, which kind of suggested that maybe this synthesis had some very real, very high-stakes applications.
Okay, so with that kind of mathematical background, how does this build into a formal discipline? It's absolutely critical that we nail down a clear academic definition here, just to separate this from, the caricatures you see in popular culture.
This right here, this is the whole ballgame, a mathematical psychology based on astronomy. That phrase reframes everything. We're not talking about fortune-telling. We're talking about a system that correlates astronomical positions, which are just pure mathematical data points, with the collective psychology that drives markets. And look, when we say horoscopes, we're not talking about your daily newspaper column. We mean the birth charts of financial entities, like the date a company was incorporated or the first trade date for an exchange.
And this really drives home the core distinction, right? A financial astrologer's performance is tied to their system. It's repeatable, it's testable, it's based on data. A psychic, on the other hand, well, they're relying on an innate ability that can be great one day and terrible the next. One is arguing for a science, the other is practicing an art. Big difference.
Now, of course, if you're going to claim to be a science, you better be ready for some serious scientific scrutiny. So let's do that. Let's tackle the 3 most common academic criticisms head-on, almost like a cross-examination. Okay, first up, the charge of astronomical sloppiness. Critics love to say that astrologers don't even know the difference between the signs and the constellations. The rebuttal? Of course they do. They're well aware of the precession of the equinoxes. It's just a conscious choice. The tropical zodiac is tied to Earth's seasons. The sidereal is tied to the stars. Different systems for different purposes. As for using a geocentric or Earth-centered model, well, that's just practical. You're trading on Earth, aren't you? It's your frame of reference. And frankly, Einstein's theory of relativity shows that any frame of reference can be valid for observation. So that's kind of a moot point. The second big criticism is that there's no single unified theory. You've got all these different schools. And you know what? That's true. But is that really a fatal flaw? I mean, think about psychology. You wouldn't just throw out the whole field because a Freudian and a Jungian interpret the same dream differently, would you? The key here is that financial astrology makes hard, verifiable market calls. And because of that, it's actually forcing a convergence. The methods that work are the ones that are surviving and creating a more unified practice. At the end of the day, all these theoretical debates are secondary. For anyone who's actually in the markets, this is the only question that really matters. Does the model have predictive power? Does it work? So let's pivot from defending the theory to actually looking at its application.
Okay, this is where the rubber really meets the road. How does all this theory actually translate into trading decisions, with real capital on the line?
And I want to be clear, it does not always go right. This was an early attempt to prove the system with a big options play. It turned into a 6-figure loss. But see, this isn't a story about the system failing. It's a story about methodology. It shows that this isn't some magic bullet. You still need discipline, you still need risk management, you have to refine your approach, just like with any other trading strategy. So what comes out of a $100,000 lesson? A much, much smarter system,
One that started mapping intraday sentiment, that developed a pricing model so precise it could call turning points down to the last tick, and most importantly, it integrated astrological timing with standard fundamental and technical analysis. The claim isn't that astrology replaces what you do now. The claim is that it adds a critical third dimension, timing.
Look, nobody in the forecasting business has a perfect record. There's that old joke, right? Why did God create meteorologists? To make economists look good. The point is, forecasting is an imperfect science, period. The goal isn't perfection. It's about finding a consistent edge. And financial astrology should be judged by that same standard of utility, not some impossible standard of being right 100% of the time.
So what is an analyst actually looking at when they do this? Let's just briefly open the toolkit so you can appreciate the level of detail we're talking about here. It gets pretty complex.
So, the foundation of everything is the birth chart of an entity, like the incorporation date for a company. Then, analysts use timing techniques like transits, that's just where the planets are right now, and progressions, which is more of a symbolic day-for-a-year system. The concept of orbs is also really important. It just means an event's influence is felt in a window of time, not just at one precise second. And all of this requires absolute painstaking precision. A simple mistake, like forgetting to account for daylight savings time, can throw the whole forecast off and turn a winner into a loser.
And this isn't just for short-term trading. At a macro level, you can apply this to huge strategic decisions. By analyzing the birth charts for entire countries in their stock exchanges, you can build a model to help decide how to weight your assets between major hubs like New York, London, and Tokyo. It's a completely different kind of top-down approach to global strategy.
So where does all this leave us? Is this just some relic of the past, or is it a science that's only now starting to come into its own?
First things first, let's clear up the biggest philosophical hurdle people have, this idea of fate versus free will. The best way to think about it is like a weather forecast. The chart might say there's a high probability of a market downturn, that it's going to rain, but it doesn't force you to stand outside and get soaked. You still have the free will to adjust your portfolio, to take an umbrella. It's all about probabilities, not pre-written destiny.
The argument here is that this discipline is basically in its adolescence. For centuries, it was passed down through oral traditions, almost like family secrets. But now, with modern computing power and global communication, it's being properly codified. The old misconceptions are being thrown out, and the underlying mathematical system is being refined. It's a lot like how chemistry slowly emerged from the trial and error of alchemy.
So I'll just leave you with this final thought. The models you rely on every single day were, at one point, revolutionary and strange. But we know that markets are a reflection of human psychology, a force we are still struggling to map. So what's the next revolution in financial analysis going to look like? If a new tool showed up, would you even recognize it, or would you dismiss it out of hand, just because it didn't fit the paradigm you already know? Something to think about.